Australian property prices are rising again. Almost every single capital city and major regional centre is now in a growth mode. But is this just a short-term recovery or the start of a prolonged property boom? Well, I've spent hours digging in the data to find out exactly what's going on and what it means for buyers and investors right now. Because if you're able to understand what's driving this boom, there's real money to be made. So in this episode, I'm going to show you what's behind this latest price surge, where the best opportunities are, and how to avoid jumping in at the wrong time. But in order to get our heads around what's going on right now, we really need to understand how we got to this point. You see, as we got towards the end of 2024, the property market started to slow. Prices even started to fall in many areas around the country. Lots of people said, okay, this is finally the end for the property market. Prices are going to crash. Even the latest rate cut we had back in February, they said wouldn't have much of an impact because it wouldn't make a huge difference to people. But here's what they got wrong. Although they were right, the rate cut didn't really reduce people's mortgage payments by a huge amount, and it didn't increase people's borrowing capacities by a huge amount. What it did tell the market is that no more rate hikes were coming. People felt more confident going in to buy a property because they felt that their mortgage payments would not rise. More than likely, because there are more rate cuts expected, their mortgage payments would fall. That gave them confidence. That got a lot more people entering the market. And what do you think happens to property prices when we have more buyers in multiple areas around the country than available properties for sale? You're right, it drives property prices higher. Now that that's clear, let's have a look through the data. And when we look at price movement over the last 3 months, we can see that prices are up in every single one of our capital cities, except for Canberra. And when we look at regional markets, we can see that regional markets across the country are all higher over the 3 months, some of them outperforming our capital cities. But what impact will this have on property investors? Well, there are 3 big changes this is going to have. Number 1, I recently met a couple who said to me, Nero, we wish we met you 10 years ago. Now, when I asked why, they said, well, Nero, we were considering buying an investment property 10 years ago, but then we didn't because our friends and family said, don't invest in property. Prices are already so high, people can't afford them. And if you wait, it's more than likely that property prices will fall. You'll get a bargain. Well, they've been waiting for 10 years and now property prices are much higher than they were 10 years ago. And my advice to them was, it's so unfortunate that happened, but don't let another 10 years go past. Don't look back in 10 years' time wishing you'd bought today. You see, yes, property prices are unaffordable for many people, but that's always been the case. In fact, here's an article from the 1960s talking about how young couples are struggling to find property. So even back then, people were saying prices are too expensive, the government has to do something. And what's happened? Prices have risen significantly since the 1960s, and I expect you're going to see that happen again. Yes, there will be some people who can't afford property, but what this really says is that if you are someone who can afford to buy an investment property and you choose to wait and see, the odds are that you'll either end up paying a lot more or potentially missing out altogether. Number 2, I'm seeing right now a lot of people realizing that property prices are going to rise and they're jumping in. But what they're saying is, look how expensive houses are in perhaps their local area and they can't afford to buy a house. So they're buying an apartment. Now, we have decades of research behind us that show that house price growth has always outperformed apartment price growth. Now, I do expect though, in the short term, you might see a bit of a blip upwards in terms of apartment prices because there has been so little development in recent years. But with all the government incentives and with the government throwing now $33 billion at this housing crisis that we have in Australia, we are going to see a lot more development in terms of apartments. So what will happen is in the short term, prices will rise because there won't be enough supply. But then as developers start increasing supply, more and more towers start being erected, you're going to see that price growth dissipate. So instead of trying to go and buy an apartment, focus on buying something with a land component because they can't build any more land. Focus on houses. And if you can't afford to buy a house in the area that you live in, there are plenty of areas around the country where prices are more affordable and where rental demand is actually stronger than what it is in places like Sydney and Melbourne. Plus, there's a lot of jobs growth and there's lots of people moving into these areas because they're so much more affordable, which is driving prices higher. So focus on buying houses in locations you can afford with strong capital growth potential. Don't compromise and say, oh, if I can't afford a house, I'll just buy an apartment here and I'll be okay. Odds are you're going to come unstuck. By the way, before we get to the third and final change, if you're not sure where to invest or you're not sure how to go about doing this whole property investing thing, my team can take care of the whole process for you without you needing to even leave the comfort of your own home. So if that's of interest, and if you'd like to know more about how we might be able to help you, click the link in the description below to get a totally free, no obligation consult with a member of my team. This then brings us to the third and final change that is going to happen as a result of property prices rising. And it's this. I got a phone call recently from an investor, and I get this quite often. They were someone who said, look, Nero, we want to improve our personal cash flow. Can you recommend certain properties for us? Now, when I dug a bit deeper into that, I found out that this was someone who owned their own business. Their business had unfortunately started to slow down and they needed more cash flow. And they thought that they could buy properties in good locations around Australia that gave them positive cash flow from day one. Now, this is a common mistake I see so many people make. Buying property for positive cash flow in Australia is not something that's readily possible at the moment with where interest rates are and with where property prices are. Now, that does not mean you can't build a passive income through property. We've helped countless clients do this. But what you don't do is you don't go and buy a small, cheap property in a rural location that might have a local pub and maybe a couple of mines. And yes, you might get positive cash flow for maybe the next year or so. But what happens when those mines close and everyone who's working in those mines leave and now you can't find a tenant for your property? You'd end up in the horrible situation where you have a property where you struggle to get it rented and where you can't sell because the odds are prices would have fallen. So that is not the approach to take. Instead, you want to focus on capital growth because capital growth is the pathway to building positive cash flow. Now, that might sound counterintuitive, but in Australia, what you want to be doing is buying a property that you can afford in a good location that rises in value and where also rents rise over time. You then over time build a portfolio and you might then end up potentially selling one or two properties to bring down the debts and free up the positive cash flow. So it's not an immediate process. So instead of trying to find positive cash flow properties, focus on areas where there is strong capital growth potential, primarily because there's more demand from owner occupiers than properties available for sale, and where there's strong rental growth because there are not enough properties to rent for the number of people who want to rent there. Focus on those two aspects and you'll find that your first property will then lead to a second property and subsequent properties over time, and then you'll be in a position to actually build the passive income that you're after. However, although house prices are rising, don't go out there and just be gung-ho and buy the very first property you find that you can afford. The reason I say that is because the federal government has just made some major changes that will have an impact on the property market as a result of the latest budget. So check out this next video where I walk you through the changes the federal government has proposed and how they are likely to impact property investors.